There it is.
All right. Welcome back, everyone, to the third episode of the day on the Financial Summit Network. It got kicked off with the Matt McGregor show, the Daily High, and myself, then followed by Mike Williams, who had to do it solo without Sammy Loyal this time. Good to have Mike back on the show. I just watched it. Mike was more bearish than bullish, like myself. And now, because of the massive action in the price of Bitcoin, we got Mark Wood on earlier than usual. Usually, this is a Wednesday show, but with this price action, it was super important. Let's do the show earlier in the week, Mark. And hope your weekend was good. You have about 30 minutes for us today, and we're going to dive right into the charts.
Let's do it. Yes. Yes, I'm actually traveling to Colorado for a music event anyway, so I won't be available on Wednesday. So why not knock it down today while price is flying all over the place, right?
Yep, sounds good. Oh, let
All
me
right.
give you screen share
Yeah,
permission here. There you go.
let's see. We got it.
Love
Should have it now, right?
Yep.
Perfect. Okay, let's just jump right into it real quick. I just got a couple of things to show that I've been looking at and considering. So, we mentioned, Tone and I mentioned the possibility of this inverted head and shoulders pattern, because I was fairly confident on our last stream, maybe the last two streams, that the price was going to head to 60K, based on some other things I'll show in a second. But here we are at 60K, so accurate. Now we have the one thing I don't like when I see the right side printing lower highs. It doesn't mean it can't play out as an inverted head and shoulders, but we have a kind of a clear trend line here now to be watching. Well, we can't really consider this potentially breaking out until back above 70, 71K. Being said, if we look right here, I've got these two red horizontals drawn. This is kind of the price is already wicked to where I would consider invalidating this idea, which is right around $59,600. That's just coming off of these low wicks on the left side. And I had the upper horizontal, which you can see was relevant for a minute at 60,700. So let's see if we can get this area to hold. Now, let me show you what I was looking at that was giving me such a high level of confidence in the price dropping to this range. It's something that I showed um, probably on the last two streams, which was just a very bearish moving average cross down to a key area support. So I've talked about the relationship of EMAs and SMAs crossing, and we had this taking place on the 3-day. Where are my moving averages? Let's see. Oh, generating. Here they are. And lo and behold, bam. So I'm pretty sure when we were streaming the last week, we were sitting around 70K probably. And Tone was hoping for a bullish bottom there and the price to continue to move up. But my my history and my experience tells me that this moving average cross is a magnet. I don't even know if I could find an example in history where this didn't play out on a time frame as high as 3-day. So, and we had the same cross taking place on CME. I'm pretty sure it was 2-day. Let's take a look and see. 2-day. My internet seems to be a little bit laggy today, which we've been having problems. Come on. Generate.
So yeah, University of Florida has been too busy recruiting like the 7'6" guy to play basketball. Took
Did you
way more priority than making sure everyone on campus has internet.
No, we actually have had some issues with the internet here, and I'm not sure we're still streaming, but I can't get TradingView to reload. It's kind of stuck. Let me see what happens if I.
Yeah, I found these problems myself. There you go.
All right, let's see. Let me just try to reload this site. Yeah, did you see that tone? That seven, he's like 7'6", something like
Mhm.
that.
Yeah, it's like the next Yao Ming.
Yeah, and he looks semi-athletic, not just like a big, tall, lanky guy.
Mm.
So it'll be interesting. Which, by the way, as this is loading, um, the University of Florida baseball made it to the Final Four in the College World Series and got knocked down by Texas A&M. And that game, the World Series final game, is tonight between Tennessee and Texas A&M. That series is 1-1. It's a crapshoot as to who's going to win, but I'm thinking it's probably going to be Tennessee. I'm a huge college baseball fan, so I've been watching a ton of the World Series. So yeah, here I am back on this, but it's slow. So I'm just gonna stay on this chart. So I was talking, Tone, about the possibility of this head and shoulders, but we're at last chance hope, and was showing the moving average cross on the 3 day. So now here's something I'm really fascinated by. We if we're going to look at the MRI, we are in a situation where we have 4 hour MRI buy lining up with daily MRI buy, and that combination comes so rarely. Let's see if I can get the MRI to load. There it is. Right. So have you been following this, Tone? Are you checking out this 4 hour MRI scenario?
I mentioned it this morning, but I haven't looked at my charts since. I actually spent the last 3 hours driving from up north into the city, and now we're on the stream.
So we've got 4 hour coming into an MRI, and we've got the daily coming into an MRI buy.
Yep,
Uh,
the daily is tomorrow, but
daily
I
is
don't
tomorrow.
like the fact that we may break the MRI support line at candle close. I'm
Right
hoping
here.
to avoid that. So I actually, but if we avoid that, then the low is being made today, not tomorrow. I'm okay with that. I'm okay with the low coming in today. If you go back to the last MRI buy at the lows on your chart,
Right here.
nope,
Oh,
at the
here.
low. No, lows.
Which lows?
The lows.
Oh, down
No.
here. Down here.
Yes, thank
Yeah.
you. Right.
Sorry.
So you see how we made the low close and we
Yes.
still made a nice bullish wick on the candle before the green candle. So
Yes.
the big red candle to the left of the MRI buy candle, I'm hoping that that is today's candle. I'm not very optimistic about the situation, but yeah, if you zoom in on that area, if you zoom in on that inverted head,
I will. Hold on.
people will be able to see it. Right. So I'm hoping that the current candle is just like the pre-MRI buy candle. Right. And then the
Yeah.
MRI candle is a green candle followed by massive follow through. The
Right.
reason why I'm more pessimistic now than I was then is multiple reasons. First off, that MRI buy opportunity also bounced off a very critical moving average, which we are now breaking.
Yes.
That MRI buy opportunity did not have an MRI support line to bounce off of because the MRI support line is a true double whammy, just like a moving average line. It's even worse to where if you break the MRI support line, the situation becomes very bearish according to the MRI. You can still get a 1 to 4 candle bounce, but you now should be anticipating the extensions to play out. So the other issue back then is that those lows made a significant lower low and kind of retraced back to an area of support, even though it could have gone a smidge lower, going back to the area of the breakout. So if you lower your cursor below the moving averages, a little lower, like, yep, right, a little lower than that, right there. That would have been the perfect retrace and holding the prior MRI support. That would have been the perfect retrace. Now we didn't go as low because the moving averages helped and we hadn't really fallen far enough. None of that is true anymore, right? Now we're not actually falling to an area of support. In fact, we are falling, well, we're falling to an area of prior support that was already tested. And we're in an area of accelerated lower lows instead of looking for support. This is where, based on price action, we're approaching prior lows, which for me signals you need lower lows. So while the MRI is like the only bullish thing I have right now, I have nothing to cling to other than an MRI buy coming up tomorrow. That's it. And the 4 hour happening right now, 5 hours before the daily MRI buy helps, but not enough for me to be optimistic this hour.
Yes, I'm not optimistic either. By the way, Tone, your mic is a little muffled. It was
Okay.
fine, it was fine earlier, but it's a little bit muffled. So we're having all kinds of technical
No.
worse,
Okay, how about now?
better.
Better. Okay.
Yeah.
I
So I
went
agree.
I went back to my old mic that I used to
It's
use a year
still
ago.
it's
Yeah,
still a
and
little it's
I
still a little
remember
bit
my settings.
yeah, it's still a little bit fuzzy. Like
A
it
little bit
helps
fuzzy.
it helps
What
when
am
you're it helps when you're closer.
right? Yeah, but I don't want to be closer. What about now?
Yeah, a little bit better now. Yeah.
Okay.
So I agree. And the moving average I think Tone is talking about is this pink one here, which is the 128 on daily. And we can see I look for three closes below, and now this is resistance. Now 65.2 is resistance, and that will climb. And this is another key moving average that I was watching, this blue moving average, which is a fib number moving average. And I agree with Tone. Ideally, I would like to see this daily candle close, have a bounce, look more like this candle, have a bounce and close back up above, both above this MRI support and moving average, but that would require a bounce of about, well, $1,200. I'm not sure we're going to see that. However, it's just one close below. I kind of need to see two or three consecutive closes below before losing this. And then there's one other interesting thing I really wanted to discuss, because it's a scenario that I have never seen in the history of Bitcoin before, and it's got a lot of information in it. I need to turn MRI off and Bollinger Bands on, and I'm going to go to the weekly, and we will see here that this is such a critical level of support. Bam. So I always consider, if we look back at 2016, um, we can see the history of the middle Bollinger Band and the weekly. Basically, a really simple way of looking at it is anything above the middle band on weekly is bullish, and we're below it, looking to close potentially a second week below it. That's not great. And it's also not great to be sitting below the 21, but it's early in the week. Let's see where this week finishes. In general, the weekly 21, the area of the weekly 21 and middle Bollinger Band is a buy zone in a bull market. The markets are getting smarter. I can tell that bigger money is in the game because they're learning how to mess with these signals a little bit. Now, again, anytime the yellow 21 is below the middle Bollinger Band, it's a target. Anytime. It doesn't matter how high the price bounces, as long as it's below it, it's always going to be a target. And we can see in this move here, we got a nice bounce right off of this area of support and back up to the top band. However, the yellow was still trending below, and that was not able to hold the second attempt. So as long as the yellow 21 is still trending low, and now it's curling down, it's not good. However, just from my experience, this I'm considering this a buy zone, getting into a very, very low risk buy zone. If you're trading, you can literally put a a stop right below at 59K, or you could depending, hopefully you're not with super high leverage, even set below maybe this weekly swing low, and then you're out and you're definitely going to be buying lower or shorting. However, this weekly support, I've never seen in the history of Bitcoin where the price has been at the bottom Bollinger Band and this key moving average. And if I zoom over to 2016, we can just see how clear of a signal this was. Um, every time the price trended into this area, even when the 21 was sitting below, here's a perfect example in March 2017. That was a buy. That was a buy. Anywhere where we're seeing um, in a bull market, top test to the top, oscillate to the middle, test to the top, oscillate to the middle, test to the top, oscillate to the middle, repeat, repeat, rinse. This was one of the cleanest technical cycles I think Bitcoin will ever see. And so here we are. We've had the same moves, just not as clean. We've had a run to the top, test to the middle, run to the top, test to the middle, run to the top. We lost this, but the bottom Bollinger Band held. So basically what I'm trying to say is I would not be wanting to see this weekly candle closed below 60,000. The other signal that we're getting from this is the squeeze of the Bollinger Bands. They are as tight as they've ever been in history. And when you get a Bollinger Band squeeze this tight on history, it's telling us a giant move is brewed. Like we've talked about this with other signals on 4-day, 30%, 40%. So a drop much below, I'm going to allow room actually to 58,000, and I can show why. And however, I would like to have this area of 60K recaptured at some point quickly within 1 week or 2 weeks. The the importance of not closing too many candles below this Bollinger Band is very high, because once that is lost, we can see this here on the downtrend. Once you start closing candles below the bottom, it can signal expansion to the downside, expansion to the downside. It's kind of signaling lower lows are coming. So this is a super critical area of support, which is one of the reasons I wanted to kind of come hang out with Tone and discuss it, to see. First of all, I missed the stream with Matt today, so I wasn't quite sure where the sentiments were, but I am not bearish per se. I still believe that Bitcoin is in a long-term uptrend. This is a healthy correction. It might go on significantly longer than expected. However, on my very first stream with Tone, I brought up this 2-month chart, and here we are about to close a second candle in 6 days, almost like a double top shooting star scenario, which doesn't look good at all. But this candle has told me to expect price to go sideways for several candles, and we're kind of seeing that play out now. The inability to create a new swing higher and a new all-time high makes it even more probable that we're going to trend sideways. Here is the moving average support. It's very easy to see. We will have two areas of support. 57.3 close. We're looking to try not to close below there, and the next area is going to be around 47K. However, these moving averages are going to trend higher on the close. I still believe there's a chance to trend down and test the 40, let's just call it the low 50Ks area. Um, Now, why am I not super concerned? Because we can see the 21 moving average is crossing the mid band. I'm not convinced it's going to happen on this close, but it's looking possible. And historically, that has been a very strong bullish signal for Bitcoin. So my current TA is basically try to find a low here. We have no sign of any kind of bullish divergence on 4 hours. So I'm expecting one more lower low. And I think that could come in the 58, 57, 58,000 range. And I would like to see that hold. Opinions on that, Tone?
Well, remember I always said I didn't like 61, 62 as a bounce for the low. I didn't like this area at all. Other than the MRI buy, I see absolutely nothing that's going to bounce the price here. I always did. And since we didn't rally from 64, 65 area, where we bounced off the 128 initially, but we didn't hold the bounce. And there's a chance at 58, but it either needs to get to 58 tomorrow or the next day for the current MRI bounce. Or I'm thinking significantly lower, like 51.
Yeah,
So
I
58,
don't.
58 has a shot if it's a catastrophic fall in the next 48 hours. If it's not a catastrophic fall in the next 48 hours, I think the chances that 58 is the support is incredibly low. A slow bleed to 58 is not going to reverse the price. It has to be a crash to 58.
Yeah, I would like to see a low today around 60 and then a a quick flash down to 58 to create some of that some bullish divergence between the RSI and price. And I would have a little bit more confidence that this is going to be the low. Um, Now, there is a, let me see if I can put in, um, where are we? If we go to 2017, we can see this is one other reason why I'm not panicked yet until we get to, okay, hold on, until we get to below 58. This moving average right here, this is a fib number moving average. We can see right here in June 2023, right when we were having the same summer consolidation type move, it held perfectly with just a few closes below and got a bounce. And then right here is where things get dicey. We tried one time, two times, three times to get above there. And if this moving average had continued to diverge lower, we would have been seeing significant lower lows. And again, we were talking about this on the other stream. We're in such a similar scenario. This low in June 2023 was 24,770. This low was 24,930. Looking super bearish, like we are getting ready to go to new lows. So I would like to see this area hold, basing off of this moving average. And this particular scenario, I don't think it would be good to have the purple. So these two moving averages are fib numbers. This is 377. This was absolute perfect buy zone in 2017. It was actually almost like too clean of a cheat code. And this is the 233. So these are kind of the lowest levels of moving average support that I can find on the 12-hour chart, showing us that 58K, 57, 58K to 60K is key. But I'm not I'm not super discouraged yet, Tone, because we do have this 4-hour MRI buy lining up with the daily MRI buy, lining up with the weekly support of the lower Bollinger Band and 21 EMA, and we're at this really key critical area of support on the 12-hour chart. Like, it's a setup that only comes a few times in it, not even in a year, like in a bull market. So, and from a trading slash investing standpoint, I think you are the lower the price trends closer to 58K, the less risk you're taking, and the closer you can have a stop loss to minimize that risk. So we're getting kind of into what I personally consider as a sweet buy zone. Now, if you were short, I think weekly I believe is weekly on a red star candle yet, Tone?
Yeah, it's past it.
Yeah. So weekly in theory was a short where I would say probably 63K
Yep, that's where I exited.
right there. Yep,
Yeah,
63.
Mark, so real quick, right? Now that
Yeah,
you have can you go to your prior chart real quick first and then we go back to this?
12 hour.
Whichever you were using before, yeah. It's frozen again.
Yeah, it's just really slow. I'm wondering if it might even move quicker off of my phone, but it's frozen. Oh, here it goes. Okay.
There we go. So yeah, so can you like maybe yeah, like that, right? So my problem is yes, there for me it's only the MRI buy because um I know you like that moving average, but here's why that moving average doesn't matter to me much. Because it's a double bottom. And of all the things I don't want to see is I don't want to see a double bottom. And if we go to that moving average, we have a straight up double bottom. And I don't want to see that. So if you now go back to your weekly chart,
Yeah, I understand what you're saying, and I'm not disagreeing with you at all, but we did have this same double bottom scenario right here that was also looking like a double top. But here we are back on weekly.
correct. I didn't like it then either, right?
I didn't.
But that one was not as bad as the current one. The current one's worse because there's so much room to the downside and all the way down to those tops you just pointed to, right? And whichever weekly chart you had before we went back to the 12-hour had a moving average on it. There it is. See, this moving average, now you have way too many.
Yeah, but just showing the yellow one is the important one. Okay.
Well, the yellow one's lost. The yellow one's done.
And when we begin closing below that on a red star candle, that's not a good sign. It's not a good sign. And we can see here where these moving averages are bending down. So it's just showing us very simple look that 64.5K is going to be a key area to pick up.
Wait, we're going. I just want to finish what I was saying. Hold on, because now we're going into a completely different direction. The purple moving average may look like a double bottom to some, but it's not. The purple moving average is a significant lower low
That is,
because
yes.
most likely you're going to pierce it and then recover on a weekly level. So if you pierce that purple moving average on a wick and pull back up, you will establish a clean lower low in the upper $50,000 range.
Yes. So just to be clear, the majority of these are fib numbers. I'll tell you real quick. Orange is 8, gray is 13, yellow is 21, this purple is 34, and the green is 55.89. Now, I'm not really expecting the price to dig too much lower, but you're right, Tony. If it touches the purple moving average, well, now we have a lower high and a lower low. So we are back into a weekly downtrend.
Again, everything points to a very shitty situation. Now, if you go back to that double bottom that we had last year in 23, notice that we held an awesome moving average right there. Whatever your purple
That is
is
a it's
great.
a 200 EMA. Yeah.
And we had a MRI buy. There was a
MRI.
weekly MRI buy right there. So for the same reason why I am hanging on by a thread, being potentially uh, allowing the possibility of a double bottom, is that there just like there was a weekly MRI buy, which you are going away from,
Yeah,
Mark.
I'm going away from that real quick.
Right. Uh, that weekly MRI buy allowed me to consider the possibility that there might be a double bottom. And now there is a daily MRI buy tomorrow, which opens up the possibility for a double bottom. But under normal conditions, if it wasn't for the MRI, it would be bearish as hell.
Yes. I wouldn't, yes. I I'm not bearish as hell until below 58K. And then I'm right there with you, 100%. We can see that through 2016, this purple moving average that Tone is talking about really never got tagged. Um, it the price was always held closes with the yellow moving average all the way up. The only time was in the early stages back here in April 2016, and these were just some crazy liquidity wicks going on, where that area did hold, and then there was this crazy wick right here. But for the most part, the closes were held above yellow. And yes, I want the weekly to continue to hold closes above 60K. You know, if this week is closed below 60K and closed below the middle Bollinger Band or the bottom Bollinger Band, that's pretty bearish. And what's even a little bit scarier from there is that signals that have low volatility signals that we've looked at are suggesting, we're looking at a 25 to 40% move, um, one way or another. And that could completely play out to the downside. We just have to be careful, because sometimes when you get these low volatility readings, you will see a move in the opposite direction of the overall move. And we are entering a bit of a bear trap scenario, um, which is does not remain a bear trap below 57K. Now we're just in a weekly downtrend. And would you consider that um, a quote bear market in Bitcoin, Tone, or no?
No, we're gonna have to go further down for it to be a bear market. We're still
Yeah,
in a massive bull market.
yes, I totally agree. And um, that's my point is we are in a massive bull market. The overall trend is up. Oh, and there was one other thing that kind of gives us. So if I pull up Consensio, so we look at 4-day and 5-day. Our 4-day and 5-day has basically said, yes, take some profit. Um, think about exiting the markets. The most possible conservative look we can get on Bitcoin is Consensio weekly. And here we are with the 30 moving average. This is a long-term moving average in the black, sitting at 57.4. So I do think, and if we look back here, all those wicks I was mentioning in 2016 dropped right to that black moving average, and then the price started launching off of it. In 2020, the price went too fast and didn't have time to test it. So I think a test of this moving average will be healthy for the long term, even if we end up getting closes below it, like we saw here. So this period in history last summer, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks closing below that moving average, without a significant lower low, that's almost impossible scenario. I'm not convinced that if we drop below here, we'll be quite as lucky. But I do believe that we are setting up for a lot of boring sideways chop for July, August, September, into October. And I think that the whole overall structure is going to be set by that period of time. And I still believe that the structure is going to remain overall bullish. So hopefully what I wanted to convey today was, yes, we're getting a severe drop. We've got potential MRI buys on 4-hour, potential MRI buys on daily. We've got fear in the fear and greed index, like reading 40 or something like that. And we're coming down to incredibly important key levels of support. So the sentiment is exactly where it should be. And we are full of hopium, until we're starting to see the price really significantly hold daily closes below, let's just call it 57K. So that's about all that I really had to talk about and cover today, to Tone, unless there was something else you wanted to go over.
Well, that's it. You want to pull up Nvidia maybe? I don't know if you've seen
Sure.
my videos about it over the last couple of days. I missed the trade. I was all lined up to short the shit out of it today or tomorrow, but it crashed on Thursday and I wasn't looking at the market and now I'm too late.
Wasn't there an MRI sell on daily on Nvidia coming up?
And weekly and monthly. It was going to be once in a decade uh top on Nvidia. I talked about it for 3 or 4 days leading up to it. It was gapping like huge on Thursday, and I wasn't paying attention. I missed that entire bearish engulfing candle, and at that point, I was too pissed off to short, and now it's down a lot more, and now it's too late to short.
So yeah, I mean, it has, how far is this dropped? Not too much.
Significant.
15%.
That's significant. That's the problem isn't, look, my target is 95.
Yeah.
Here's my problem. If I enter the trade right now and it rallies to 135, what do I do?
If you enter now as a short,
Yeah, and it rallies to 135, what do I do?
135, right about up here.
Correct.
Um, I mean, I don't know. That's a good question. I would,
And
I
that's why,
would,
and that's why I'm not taking the trade, right?
no, yeah,
If
yeah,
I
I agree.
if I sold it at say anything above 135, I know what to do if it goes to 138. But if I short here at 120 and it goes to 135, I don't know what to do with that trade. I'm going to cut the trade. I'm going to take a massive loss, and then it's just going to turn around and fall to 95. And that's why I can't take the short trade right now. Like
Well, and
when you don't get your entry, it's best to go and find another trade.
so here is a kind of a similar example.
Exactly.
This was
Exactly.
February 2024, and it looks like we had a drop, maybe not quite as much, but pretty, yeah, about the same, 12%. And you have a red star candle, but at key support. This is the most important support
Right.
on weekly to keep an uptrend. And you're on there now. So yeah, this is definitely, in fact, this is kind of like a take profit
Correct.
area if
Yes.
you had shorted,
That's correct.
that move. Yes. Um, Nvidia is, let me see if I can find this. I don't know if I have it saved. Um, Nvidia is, I believe, okay, I think I got it. It's one of these. And I've chatted with Socrates about this. I do believe it's in a hyperwave, but I also think it can correct all the way to, I want to say 90. 100 and still be fine. It's so frustrating today. Nope, there it is. Okay, so I've actually drawn this a different way. I've actually cheated a little bit with hyperwave and um, added a couple of phases that Tyler Jenks would debate me on, but this is fairly clean right here. I don't this is kind of as clean of a hyperwave as you can get. This phase three is pretty short. Um, but this long run of phase one kind of allows for this short phase and this blast off to get to where the price is now. So this was before the split. Um, this was before the stock split, which was kind of like a sell the news event for the most part. It still rose a little bit, but this, it's not surprising to me that the news of a stock split.
It runs to 1400, which is just off your scale.
1400.
Yeah.
Well, this isn't a live chart. This is a saved link.
I know, but I'm saying like 2 days ago on Thursday it was 140. So a 10-to-1 split is 1400.
Got you. Um, yeah, there is a. Let me see if I can find this really
We're
quickly.
seeing your DMs. Not
Yeah,
a
I
good
know.
idea.
I gotta get off of there. There is a much cleaner look that I have, but I just can't find it right now, Tone. I'm sorry.
Okay.
Um, oh wait, oh, that's not it. That has Nvidia laid out perfectly. And
Go back. What the hell was that? What was that other chart that you just had on?
um oh no, yeah, but that wasn't the hyperwave chart. I
I know,
have
but it was just cool. It was like MRI tops left and right. What was that? No, it was a white
oh,
chart.
here it is. Here it is. Okay, sorry. I'll go back to that. So here is how I've reconstructed Nvidia. And I'm totally cheating. Tyler Jenks would yell at me, but I don't care. Um, this makes a lot more sense to me that the way that I have it drawn because it makes this run. So phase one, you're looking for the price not to be able to bump up above a specific price. When I zoom in on this, we can see um, we can see that it took forever for the price to get above, which is now 147. Now I actually have this drawn on monthly, but I'll adjust it for weekly for now. And we have a nice run off of phase two, a nice touch, and then we have these just only two touches of phase three, which I don't like, but it doesn't matter because here is where it really began acting like a hyperwave. There was like, I'm calling this phase 3.5, and then this launch mode. And then when I spread this out, we're going to be able to see. Um, so this this allows the price to drop all the way back down to 100 and still maintain phase four of the hyperwave. So this can drop all the
That's
way,
my target. That's my target, 95 to 100, like the prior swing high. That's
and
my
then
target.
this can continue on to significantly higher prices from there. So this what I have written as 4.5 is just if I connect these weekly closes, this was just to pay attention. So when this orange trend line was lost, that tells me, okay, we're probably going back to this red trend line. So you can certainly stay short. I would have been taking a little bit of profit there if you happen to catch this short. And would be wanting to exit fully by the time the price reached here. And then I would, I don't think that this hyperwave is over. Do you think Nvidia is done?
No.
No, it's going, it's going significantly higher. Most
Yeah,
likely.
you might buy it at 95, but right now I can't short it.
Well, now this does not look good though, Tone. This monthly candle that closes in 4 days,
Right, and the next one is MRI top.
and the next one is MRI top. So this wick, this is what I think we could possibly see as a low, a bounce. I don't think it might be it might have topped. Um,
Top. That's the problem, right? Like I was eyeing the top, but I missed timing it. I didn't time it right, and it really crashed too far. Won't chase. Like look at the last two MRI tops. They were perfect.
yeah,
And there's one coming in a few days.
not good. And so basically what we're seeing with Nvidia is it is in a hyperwave. I'm fairly confident in that. I'm not convinced it's over yet, although this monthly candle is not good. It's a blow off top. Like that is exactly what you'd be looking for. And if in fact, if in fact it it has completed, I just have a few really quick examples. This is the Nasdaq completing a hyperwave um, in 2000 off the .com, and we had 83% fall. This is Bitcoin's hyperwave off of 20K, which settled right on this phase two line, funky hyperwave, about an 83%, 84% drop. Here is GE, which still has not even come close to getting back to its all-time high. Also saw a 90% drop. And I don't know if I had any more. Boeing. Here's Boeing, another 85% drop off of that phase four. So I'm not calling yet comfortably a top, like a top hyperwave ending top, but it's possible. It's not looking good. So I think that's good for today, Tone.
Yeah, sounds good. All right, Mark. Thanks again for joining. And maybe we'll get you at the end of the week, or if not, early next week. But I guess it depends on the price action.
All right, you got it.
All right. I wanna let's get you off screen share here. Oh, we gotta talk about this next time.
The hash power.
Yeah.
Yeah, we'll get to that. It's still, we can see we're having a secondary capitulation right now, which is fine. It's going to take a while. I still think it's going to be several months before we're seeing Bitcoin doing anything significantly bullish, just based on how this typically acts as well.
All right, guys. Well, on this note, thank you all for watching. I just pulled up a quick chart of the cycle, and we are approaching the lowest levels since the halving on a relative basis. All right, Mark, thanks again for joining us on this Monday. Good luck. You're off to Colorado. I'm off to Wisconsin and then Minnesota. So we'll both be traveling across the US. And I will see you all on the next one.